What's driving this current Bitcoin drop? Contrary to popular belief, it's not caused by long-term holder actions or ETF outflows. Instead, this decline stems from short-term liquidity tightening and risk-off positioning due to negative bank headlines such as the Metropolitan Capital Bank and trust failure in Chicago that took place January 30, 2026. This is a liquidity air pocket, a momentary phase, not a shift in the overall market thesis. Now, why does Bitcoin need to drop before it can surge upward? Parabolic movements require three essential conditions. 1. A clean positioning with weak hands removed. 2. A reset of convexity in options and futures. 3. A narrative filled with disbelief. This current drop fulfills all three conditions. Weak positions are cleared, leverage is compressed, and funding rates turn neutral or negative. This dynamic sets the stage for significant upside once the liquidity shifts again. You might wonder how bank stress leads to two distinct reactions in Bitcoin. In the first phase, during liquidity contraction, cash becomes king. Banks hoard reserves, and funds cut risks, causing Bitcoin to sell off alongside other assets. However, in the second phase, as liquidity expectations shift positively, Bitcoin typically responds ahead of any official announcements, often moving before it is expected to. It's important to note why ETFs don't necessarily rescue prices in this initial phase. ETF inflows can slow down during times of stress. Authorized participants widen their spreads, waiting for clearer policy signals. While ETFs may pause their purchases, they do not aggressively sell, which means supply doesn't increase. Demand simply retracts. This current drop also improves the chances of a parabolic surge, accomplishing four bullish outcomes. It flushes out leverage, thereby paving the way for upward movements. It also allows time for institutional investors to rebuild their positions after volatility. Additionally, this process restores disbelief in Bitcoin's potential, creating a scenario where surprises can occur, and volatility compresses, setting the stage for explosive upward movement. Timing is everything. A decline in Bitcoin's price now helps align it with macroeconomic stresses. It allows sufficient time for positioning to reset and supplies to become tight as treasury risks escalate. This sets the groundwork for a powerful liquidity response when the moment arrives. Once we see Bitcoin stop making lower lows, even amid adverse macro news and flat funding, sellers will run out of steam, paving the way for buyers to take over. This is the tipping point where sentiment shifts dramatically, transitioning from "Bitcoin is weak" to "Bitcoin is going up." In conclusion, the current Bitcoin drop is a liquidity purge, a leverage reset, and a vital psychological condition that aligns with the pressing issues in the treasury and banking sectors. This drawdown is not a problem, it's a necessary precondition for forthcoming explosive moves. Thank you for watching. Click the like and subscribe buttons to stay informed.